Hey guys, hope you are all having a great day. Today we had a really nice green day, but perhaps even better than just a green day was a video posted by SEC Chair Gary Gensler in which he talked more in depth about the events that took place back on January and some of the components that, according to the SEC, led to brokers to criminally manipulate the markets. Do not let anyone tell you that canceling the ability to buy a stock but not stop the ability to sell isn't market manipulation, because it 100% is. I have my own thoughts and opinions on this which I will share with you. Next thing I want to talk about in detail today is in regards to the whole dilemma surrounding the proposal for unrealized taxes. The fact that our Treasury Secretary is advocating for such an incomprehensible, flawed and ridiculous tax speaks volumes to the absolute inadequacy by which public officials are hired and placed in important positions. I will talk and break this down for you guys today. Before we begin, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. Before we begin with all the good and fun stuff, I have to talk about China. Chinese authorities told billionaire Wei Ka-yan to use his own personal wealth to alleviate Evergrande. For those that don't know, Wei Ka-yan is the chairman for the company, and it was hilarious to see the government tell the chairman to leverage his own wealth to help repair the company he and his pals on the board so ineptly tanked. I actually found these Chinese statements to make sense. You see, Evergrande told their own employees to take out huge loans to help the company out, and then they didn't pay them back. It was the scummiest action I have seen a company do, only bested by Wall Street's meme stock price manipulation and SEC's disappointing consumer protections. Beijing's directive to the Evergrande founder shows that the company is indeed monitoring the situation closely, even though they love pretending it isn't a big deal. We know small local governments across their country are constantly monitoring Evergrande's bank accounts to ensure they have enough cash to complete unfinished housing projects and not that they are not diverted into other matters such as paying creditors. The demands from Beijing show signs that they are reluctant to orchestrate a government rescue, which I actually respect. This whole ridiculous notion that any company is too big to fail should be abolished, and though the Chinese government is by no means a good example of what we should try to be like, there are small portions and actions that do leave me wishing our government acted as swift and strong against bad actors in the markets. For those that are taking pity on Wei Ka-yan, keep in mind that the man dwindled from $42 billion to $7.8 billion recently, but that is still a huge amount of wealth. He should definitely be forced to pay out of pocket for the damages that he instilled in Evergrande, his employees, and the millions of people affected nationally and internationally. You and the rest of your scummy board get no pity from me. Y'all can get bent as far as the eye can see, and I hope you get what you deserve. Let's bring the topic back to GameStop, and the SEC Gary Gensler released a video on Twitter today in which he gave partial explanations to some of the problems in the foundations on the market which led to brokers being forced into blocking the ability for investors to purchase meme stocks. Here is the vid.
What is clearing and settling, and what do they have to do with a company named GameStop? In January, several retail brokerage applications restricted customer access to trading in certain meme stocks, like GameStop, as you recall. The market was extremely volatile, up and down, and many investors were told at a critical moment that they couldn't purchase stock. Understandably, these decisions drew a lot of questions. Access to our markets was restricted. And I share the frustration of investors who were locked out from making certain transactions. Everybody should have access to our capital markets. We're taking a close look at the events of earlier this year. Where we find that there was wrongdoing anywhere in our markets, we'll pursue it. One thing we do know that drove part of this, though, was the plumbing. No, not that kind of plumbing. Market plumbing. Behind our retail trades is something called a clearinghouse. They exist to reduce the risk of our capital markets by stepping between buyers and sellers to help ensure that they get their securities on one side and cash on the other. They also add some time between when you execute a buy order, for example, and when you actually get the stock. If you enter into a trade on a Monday, say, the cash and securities don't finish changing hands until Wednesday. That's called two-day settlement. But what if the price goes way up and the seller no longer wants to hand over securities? Or what if the broker goes out of business before that 2 days were up? So clearinghouses need to have rules standing in the middle to reduce those risks. And importantly, the parties to the trade need to post some money called collateral, or technically margin, to cover any of those potential losses. So back to January, the significant volatility, the trading volume in these meme stocks like GameStop prompted larger than usual calls for money, margin calls on these brokerage applications. A number of brokers then stepped in and restricted investors' ability to purchase certain stocks. These decisions raise a number of questions about the rules and procedures for brokers. Separately, they also prompted questions about whether we could lower the risk by addressing the plumbing. The longer it takes for a trade to settle, the slower the plumbing. The more risk our markets assume, the more risk fundamentally that we all assume. The good news, though, is we now have the technology to shorten that plumbing to 1 day, or even perhaps the same day. You buy a stock on Monday, you get it on Tuesday, or maybe even Monday evening. I've asked the staff of the Securities and Exchange Commission to put together a draft proposal for the Commission's review on this topic. In the meantime, I encourage you to read more about the meme stock events in the SEC staff's recently published GameStop report. Check it out on our website, sec.gov.
I am not going to mince words for you guys. I absolutely loved this video. Before I start getting called a shill, let me explain. Yes, we know of the conspiracy by market makers and brokers like Robinhood to block traders out of wealth by disabling the ability to buy shares. In fact, we have gone over court documents showing conversations between market makers and brokers in which they are freaking out over apparent huge losses. I have no doubt they hit that panic button in order to avoid defaulting and allowing the squeeze to happen. What we also need to consider is that there were also problems in the market plumbing, like Gary Gensler said, which also contributed to the issue. I find it very bullish that Gary Gensler keeps talking about GameStop and almost promoting people to read the report that they issued publicly. I went over why the report was incredibly bullish, but to summarize it up real quick, it was because the data illustrated in the report goes to prove all of our theories as true. The options trickery to delay the squeeze, the spikes in volume, everything. You sit down and go through it and you will easily put 2 and 2 together. As I have mentioned a million times already, the SEC is never going to come out and say Citadel or Virtue is responsible for a squeeze that hasn't happened. They cannot allow themselves to cause a huge market panic because that would be disastrous for the agency. Instead, we must rely on the documents of what took place and place the dots together ourselves. So far, all evidence points to shorts never covering and people still buying, which is all that you need to know. Back to Gary's video, though I am not 100% satisfied with the SEC's take on GameStop, I am incredibly grateful for their report, and even more now for attempting to fix underlying issues in the market which did impact meme stocks and have continued to impact them over time among other stocks as well. Improvements to the markets are always going to be welcomed by me, and even though some of the topics he discussed were disguised so as to not speak the truth, I still acknowledge Gary Gensler and the SEC's efforts to improve the agency. We know what we know and continue to corroborate much of our thoughts and theories with each and every public release of information by the SEC, so I have no complaints to make today. Lastly, let's talk about unrealized tax gains. It seems to me that the way our government hires people is based on a scale that measures levels of inadequate competence. Whoever is dumbest wins and gets a nice position. And here enters Janet Yellen, whose abysmal handling of every responsibility and duty in the Treasury is only bested by her dishonesty to the public. Janet Yellen recently proposed a billionaire tax in which they would be penalized for holding unrealized gains. This might be the only video I will ever make in which I defend the stance of billionaires and the rest of the 1%, but it's only because such a proposal, if passed, would create unworkable conditions and an unconstitutional mess which would harm the entire population of the United States. As seductive as the idea of imposing higher taxes on the rich might be, it just doesn't make sense to tax people on wealth they haven't sold. Most people build wealth by purchasing assets that grow in value over time, such as securities, painting, businesses, or even yachts. The owners do not pay taxes on value unless they sell them, which is when the gains become realized. Only through selling an asset can someone be held accountable into paying a tax on it. This is how most millionaires become super wealthy without paying a single dime to the government. Under the new proposal by Janet Yellen, all the appreciative assets would be taxed even if the asset isn't sold. Take Elon Musk, whose net worth rose by $126 billion. Under this new plan, the government would net $30 billion or close to it. One of the biggest dangers of this plan is that if assets start depreciating on a bad year, this would greatly put a strain on the economy overall since a huge portion of the income would become zero. If the value of Tesla were to fall next year, Elon Musk would be at a loss, and the government would not get a penny. A case could be made that to make this act balanced and fair, the government should compensate on unrealized losses. The Constitution itself might not even permit taxation on unrealized gains. There are also plenty of court cases that uphold not being taxed on unrealized gains. In 1920, the Supreme Court ruled that stock dividends and splits cannot be taxed because they are not income. I have little belief that this will continue to be pushed forward, and that it was done rather as an act to appeal to the lower and middle classes that the current administration is trying to fight for them when really it was all a dishonest act to gain brownie points and not really follow through with it because the challenges would mount up as it went through the process, and that is before all the billionaires start making so-called political donations to get the Congress to vote no. If the government was so keen on producing more money to pay for all the acts, budgets and projects they want to do, why don't they illegalize shell companies and tax loopholes in other countries? It would require just a fraction of work in comparison to passing a law to tax on unrealized gains and would yield much more profits than just taxing billionaires. It is precisely because of its effectiveness that you will actually never hear beep from Congress to go forward with it. I wanted to share this story with you guys because I find this recent aggression by Congress to tax people as incredibly opportunistic and suspicious, given that it is only a matter of time before wealth is transferred from big institutions to normal ordinary people. If I have learned one thing is that things like this are no coincidence, and I think the government just wants a higher margin in returns from your profits. Regardless, please do let me know in the comments what you think of this and if you agree with me. Let me know if you disagree and think billionaires should be taxed on unrealized gains. Now, let's talk about today. The Fed submitted over $1.423 trillion in reverse repo operations for the day. Dark pool trades for AMC accounted for 66% of the total volume today, while GameStop's dark pool trades accounted for 44% of the total volume today. According to Fidelity data, buy order flow for AMC was larger than the sell order flow, with GameStop most likely also experiencing a larger amount of buy order flow than its sell order flow. Let's now talk about performance. AMC traded bearish today, losing over 2%. It started trading on the pre-market with a slight inclination that indicated it wanted to test 37. Upon market opening, AMC had a ton of volatility which would eventually lead it down almost to 36. There, it began trading on an ascending triangle pattern, but it would then break support and fall down to 35.80. Then, all of a sudden, AMC had a very bullish performance, rising to 37.40 almost out of nowhere. It was unable to maintain a high position, or even consolidate high enough, so it fell and closed at 36.05, below the VWAP. As for tomorrow, things are not looking too bright. It is likely we might test 35.90. We could even test 35 and then 33.91. AMC will at best need to break over 37 and build on top to have a better chance at reaching 40 by Friday. Right now, even on after hours, AMC is getting attacked and dipping below 36, so tomorrow is already looking like a great opportunity to average down. GameStop traded bullish, gaining over 2%. It opened to a surge that led the stock to pass 181. It then retraced back down to the lower band of VWAP at 172.50. Then, GameStop bounced up a bit and built a ton of consolidation between 176 and 177. Around the same time AMC shot up. GME followed suit, reaching 185 at one point before dipping down to 177. It closed at 177.84, right on the VWAP. As for tomorrow, GameStop is not looking too bad. For 2 days, it has been climbing. It has support at 177, 175 and 172 while holding resistance at 180, 182 and 185. I am going to wait and be looking forward for more weakness to buy more at the moment. And that is all I have for you guys today. Let me know if you liked the video and what you think of Citadel's big day in court. Thank you all for being here with me, freaking adore you guys so much. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day and to the moon.